Welcome to Wyckoff Training Academy. Today I have shared three trade tracker reports of one of EURUSD, another one is of gold spot xauusd and Nifty index. So I thought to make a video of like 10 or 15 minutes each, explaining how I analyze the trades. I have taken 5 minutes as a sample time frame, and I've taken three of my indicators: tape reading toolkit, master market structure, and PVI device wave. So these are the total 10 trades we got in like 7 days. And if we like, all the 10 trades were profitable, so accuracy counts to 100%. And the reason for recording this video is to give you people an idea how basically this trade tracker and all the other stuff, journaling and other stuffs, it's been like it's taught in my master course, but it's my habit to make a report of everything. So it helps us, one, to understand and keep track of the trades and what works and what doesn't, and what needs to be paid attention and what needs to be improvised. So without wasting any time, we'll jump directly towards the chart and try and understand the trades that we got. So I'll record the video. You have this image with you. You can cross check it at your end. And for those people who have already opted for this indicator, they can also cross check at their end. Let's begin with this one. Let's set my annotation. Okay. So EURUSD sample time frame 5 minute. Reason for taking 5 minute time frame or lower than 5 minute, like in Nifty index, I have taken 3 minutes. It's simple, straight away. It is easy to find trades on a higher time frame. When it comes to lower time frame, the trading system or the methodology has to prove itself. If it is profitable on lower time frame, but naturally it would be profitable on higher time frames, because the margin of error reduces in higher time frame, risk and everything, and trend volatility, everything changes in higher time frame if you compare with lower time frames. So I've started from 1st Feb 24. This is my first trade. As I told you in the beginning, I have used three indicators: master market structure, tape reading toolkit 109, and price volume version 117. So okay, now it is clear to everyone, I guess. So the reason for taking this particular trade, short selling opportunity, was there. It is an upthrust trade. People who know Wyckoff and who has done Wyckoffin, like aware about Wyckoff methods or have done my course, they understand what is upthrust. It's a liquidity hunt above high, recent swing high. So I got into a sell opportunity over here in accordance with, this is the force. Weiss wave was originated by David Weiss, one of my finance mentor. So I improvised into it and I did some major improvisation into it to make it much more readable and friendly for any trader, because you can take it as there are only two logics. One thing is force. Green signifies force of demand, and let me change the color of the pen because it would be good. So this is force of demand, this is force of supply. So I took this trade into consideration based on this market structure indicator. We have a pullback. Force of supply is greater than force of demand. That made me take this trade at this particular point, and I would have exited somewhere over here. So this was the first trade which I've taken on 21st Feb. This is the second trade which I've initiated on 22nd Feb. The reason being said, simple. This is a resistance, breakout, test of resistance, and this is trade setup 2. We are eating away all the supply, and if I zoom in, you'll be able to see what I mean exactly. You can see whatever supply was there over here was eaten away by this particular bar, and the force of demand is constant, and there is no whatsoever force of supply in the market. And moreover, we have market structure indicating that price are about to go higher. So this was my buy trade setup 2. Trade setup 2 is actually I haven't mentioned it in my PDF. I'll make some correction and I'll send it again. The trade setup 2 signifies or is applied when if there is a selling or sideways movement wherein direction is not clear, and provided that we are above certain level or below certain level of market structure, and we are forming a range, or selling bars or odd or even bars are appearing, or candles are appearing. So if that is the case, and if you see a bar or a candle which is engulfing all the previous supply or previous highs and lows and closes, this signifies that whatever happened in this particular zone or particular price action was eaten away by this particular bar, and this bar is demand is in control, or demand is greater than supply. So our buys goes that price are expected to go first. That's the reason we are taking this thing, and we are taking this thing into consideration. So this is how I entered the trade, and somewhere here I guess because these are the two bars. If you are using analysis dashboard, so you might be in a position to understand what does this mean. This means weak demand or expected upward price flow. So whenever I see this kind of price behavior after a climatic move, it is always better to book profit rather than being sorry. So somewhere here I would have booked my profit. So now I'll hide this tool. This was my second trade. After that, on 23rd, this is again an upthrust trade, leaning against the structure. This is a resistance. Price went above, and this is the bar I went short. And here also you can see force of demand is getting exhausted and supply is constant, and we are approaching a key level or a level of resistance wherein we are expected to, if price is up or about to go higher, then we have to see some sort of continuation, but that is not what is taking place over here. So this is an upthrust followed by a weak demand, then continuation of price towards the downside. This would be my exit. I'll not go into exit because exit is subjective. It depends upon many factors. Though I have mentioned exit where I had exited, but I'll not get into what exactly. I think somewhere here I would have exited the trade. So this is the third trade in now. This is 26th Feb Euro USD. Here, why I have initiated this trade? Reason being said, this is resistance. This is resistance. Got converted into support. Force of demand is greater than supply. Whatever supply was here, it was absorbed. So as we all know, absorption is a very difficult thing to identify. Though this is a very beautiful example of absorption. And after absorption, we have a successful breakout, and this particular bar, I'll zoom in so that you will be able to see exactly what I'm trying to explain. This particular bar has eaten away all the supply, and this was like a feather's weight kind of a thing taking shape over here. Though we are on the resistance, but we are after this absorption, this force of demand is greater than supply, and this particular price behavior. So I initiated a buy trade over here, and likewise I have mentioned the exit also. Either ways, because exit depends upon many factors. It depends upon trader to trader where he wants to exit. Somebody uses ATR, somebody uses moving average. But my unique style of exit is completely different. It's purely based on my own method. So having said that, somewhere down the line over here or over here, I would have planned my exit. Let me see where exactly I have exited so that 26 trade settled to buy 514. Here, somewhere here because this is a position where I should be out of the trade, because now we are about seeing supply coming in. So anywhere in between would be a better position to exit. So this was the trade on 26. So I'm explaining the logic behind why I have taken this particular trade, so that the people or the traders who have bought the system are planning to buy this trading system or this indicators. They can have a fair idea how I'm planning my trades. No hurry, nothing. Wait for the opportunity. If you don't get the opportunity, don't trade, because market will give you opportunity and market would be in your favor. Try to look for trades which are very clear, precise. So here also, breakdown. First of all, price struggled above. So this is a weakness in itself. We have a breakdown. Demand, force of demand is getting weaker. As we are approaching upwards, you can see there is weak demand. If this is the force of the demand, then we would have broken out and price would have went above. We would have seen this kind of bars. So this is how I analyze market before initiating any trade. And this bar was my entry bar, because unlike in different previous examples, whatever demand was there in particularly in this two bars was washed away or was eaten away by this particular bar. So this is the bar I entered the trade, short sell. Again, it is a trade setup 2. Trade setup 2 means when we have red, green, demand, supply, demand, supply bars. So that is trade setup 2. And trade setup 1 means when we have one side pulling the market towards itself and then a pullback, that is a neutral bar, and then continuation of price. That is trade setup 1, which is explained in PDF. So this was my entry, and somewhere down the line, over here or here, I would have planned my exit. You can see the exact prices for your references. And on 27th of Feb, now on 28th of Feb, I got 2 trades. So again, these are trade setup 2 kind of a thing. First, this trade, this and this is support. This one is also support. We have a breakdown, deep penetration into support, and then this bar closing below the support, acting as a trigger bar. Reason behind initiating this trade: force of supply is greater than demand, and which is confirmed by the price bar also. So this is a short trade. I think I would have exited somewhere over here, because this bar has some kind of alarming. So I guess one second, let me check the price so that I'll be in a position to explain you what was my exit. 28,380. Yes. I had initiated short trade on the close of this candle, and this green candle underneath this support was an alarming candle for me. It's a narrow spread bar, or you can say candle. I'll change it to candle so that other people should also be able to understand. This is a narrow range candle, shortening of thrust. That's the reason we had seen this kind of pullback. So that's the reason I have exited at this particular point. And again, I entered over here, testing this particular resistance. This support now got converted into resistance. So this no demand, no supply, or near in this particular position, it is no demand, followed by supply is greater than demand. This is a perfect place to short. And then this is how and one more thing to it: supply, force is great. Force of supply is greater than demand. Though we had a very strong effort to take the market upwards, but this failure made me much more confident that prices are going to go downwards. I'm adding. There are many trades in this particular trade analysis report, which I left because they are based on my Wyckoff analysis, my way of trading. So I don't want to bring that in this video or talk about that one in this video. So I'm only concentrating on master market structure, tape reading toolkit, and this PVI and vice versa. So there are this factor of OS, oversold and over demand, and this factor of trend, intraday trend. This is also like pays importance in doing intraday, or this is basically for intraday. And this OS and OB, OS stands for oversold and OB stands for overbought. They play a vital role in understanding where the market is going to head and how we should plan a trade. So on 29th, if I don't get any trade, I don't trade. Simple. I don't overcomplicate things, and I don't run after trades because I know I will get trades, and I'm quite comfortable in making decent points in a week, and that is enough. This is a selling trade. We have broken down. We just missed this particular line by a few points, but force of supply is greater than demand. This is a valid confluence zone for initiating a sell trade on this particular case. I think I would have exited somewhere over here. This is a spring trade. Pullback. This is my entry bar. Zoom in. So this is my entry bar. Initially, my target was above this particular bar, and second target was this one, and both the targets were achieved. And this is, if we look into this PVI and vice wave, demand force is greater than supply, and as we were coming down, the supply force, it vanished, and this particular level which was drawn acted as a support, a valid support, and spring was generated over here. Third trade of March 1st was this one. Again, this resistance, it is being minorly broken, then came back, and this particular candle is engulfing whatever supply was there present at the point. This is a very wonderful and very beautiful example and clear example of absorption. But I don't recommend you to go for this kind of trading opportunity because it requires a lot of effort and time, because it is a very danger point to buy. So as I'm acquainted with this scenario, I've been through this thing a lot of times, so I can understand. So, but it is a valid trade, giving the fact that the force of demand is greater than supply. This is where I would have exited. I'm only considering trade wherein all the complete three conditions are meeting. As you might have seen. So now I'll end this EURUSD video. Second would be of XAUUSD gold spot. So please watch this video again and again, and you'll understand how I plan my trade based on these three indicators. Here I'm not applying Wyckoff analysis, so which I normally teach in my trading and which I normally do and normally use in my day-to-day trading. This video is purely related and purely constrained till we are using these three indicators. So thanks a lot for watching the video. If you have any doubt, any concern, you can write in the comment box, and or either ask me in my Telegram. Bye bye.